Hi guys, hi from Andrea Unger and some infos about index futures today. I live in Italy, I'm in Europe, the first name that comes into my mind is the DAX future. Sorry about that, it doesn't write that very well now. GX is the code you normally find, or FDAX. Okay? DAX future is on Eurex in Germany, and it's a very liquid future, very active. It was very well responding to a number of inputs and models. Lately, in the last years, it became a little bit choppier, or I may say more difficult to respond to certain inputs. So it's still a good market to develop on, but it's getting harder and harder to find good strategies on DAX. In any case, the main characteristic is to be trend following. If you develop on DAX, the outcomes are in Europe. I might tell you that a good intraday strategy should be developed with a stop loss not smaller than 50 points, but better in the direction of 70, 100 points, which means 1,250 up to 2,500 euro stop loss. Believe me, it's heavy. So consider this only if you are well capitalized for your trading. And DAX can be traded intraday and overnight, but if you feel that it is too expensive for you, you might consider his younger brother, the mini DAX. Mini DAX has 1/5 of the value of DAX future and moves pretty much in a very similar way, because Germans are very strict to the rules. And the difference is that DAX moves in half a point, mini DAX full point. So actually, if you develop strategies, you better develop on DAX data and then you apply trades to the mini DAX. It's the best way to go. Also considering that the mini DAX is still very young, was born in 2015, so actually you would not even have a long enough data set to develop on. That said, there is also the Euro Stoxx in Eurex, but I would not suggest you to focus on that market or even write it here, because Euro Stoxx is very difficult to find good models to work on. For long-term trend following, it might be fine, no problem, but on intraday or short-term overnight strategies, it's very difficult to find something that works properly, even though it is highly correlated to the DAX. But in spite of that, probably due to the weight of the tick value compared to the tick move, it does not offer a good way to enter and exit the market. At least this is my experience. So I would mention, say, DAX and eventually mini DAX if you want to stay smaller. If we go on the other side of the ocean, get to the US, obviously you have a mini S&P, code is ES, mini S&P 500. The mini S&P was probably the most liquid market in the world. It was born in 98, sorry, dropped my pen. Here it is. It was a black swan. The mini S&P changed the characteristics of the index market in the States. Actually, if you look at the S&P 500, what worked on the S&P 500 changed completely after the mini S&P was born, because this electronic market changed so much. The level of efficiency it reached changed completely the world of trading in the States. And now, today, mini S&P is very well responding to mean reverting approach, and it's very hard to find a good trend following strategy on the mini S&P. So if you want to develop on the mini S&P, it's fine, but you better look in the direction of something which is counter trend rather than trend following. Also, don't forget that it works much better on the long side in a systematic way rather than on the short, even though we remember periods of time such as 2002 or 2008 when market dropped dramatically. Also in those years, long entry counter trend models worked and produced money, while it had been difficult to find good short entries even in those markets. I got models, but it was difficult to find. So it's better to develop in the long entry, because the short moves are very hectic and it's difficult to find a clean way to trade them, because systematic trading is a clean and modern way to trade. So when the market is crazy, it's difficult to adapt to it. In the States, you also have very well known the mini Nasdaq, but I would suggest not to consider mini Nasdaq too much for automated trading. Maybe it's my limit, but I never was able to find something that worked properly on the mini Nasdaq. It's not only my experience, I can tell you also students of mine and also colleagues of mine had trouble in developing stuff on the mini Nasdaq. So I mean, I don't suggest you to focus on it. If you want, perfect, do it, and I hope you get very high success rate on it, but it might be difficult, so you better focus on some other instrument. There is also the mini Russell, which is interesting also for trend following, but it is on the ICE today, and that requires an additional fee for the market data above $100 a month, with no possibility to waive the fee if you are not professional. So actually it might be less interesting, and I just mentioned it, but I might say that you can focus on this family here, which is enough. Mini Dow is a strict cousin to the mini S&P, so you can even not consider it if you consider the mini S&P is more than enough. We have many other indexes in the world. Australian index, Korean index, Nikkei, many other things possible to trade, but it's useless, in my opinion, to trade tens of indexes, because that's not the real diversification. It's better if you go into a horizontal diversification and you explore other markets such as energies, bonds, different commodities, currencies, and not necessarily all on index futures. So I think that you can have more than enough with DAX and mini S&P, and you better diversify with other sectors that we can talk about in other videos. We've already done it. We get much more in the next videos. Stay tuned. Ciao. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.